Before we begin, it's crucial to state that this video is for informational and educational purposes only. I am not a licensed financial advisor or insurance agent. The information presented here is based on extensive research of publicly available data, customer reviews, and industry reports. You should always consult with a qualified professional and read your own policy documents carefully before making any financial decisions. This presentation does not constitute financial or legal advice. Imagine this for a second. You're driving home after a long day. You're stopped at a red light, thinking about what's for dinner when the car behind you didn't stop. It's a classic fender bender. Nobody's hurt, thank God. But your new bumper is now a crumpled piece of metal. Annoying, but not the end of the world, right? You have insurance. You've been paying your premiums on time every month for years. You pull out your phone, you call the number on your insurance card, and you think, this is why I pay them. They'll handle it. But then a week goes by. Then two. The friendly voice on the phone is replaced by hold music. The initial estimate from their adjuster is so low it's laughable. It wouldn't even cover the cost of the paint. They start asking you for recorded statements, for documents you can't find, using terms like comparative negligence and diminished value that sound designed to confuse you. Suddenly, the company whose funny commercials you see every single day, the one with the catchy jingle and the emu, feels less like a safety net and more like an adversary. This nightmare scenario is the single biggest fear for every person paying for car insurance. And today, we're going to find out if it's a likely reality with one of the biggest players in the game, Liberty Mutual. Is Liberty Mutual a good choice for your next car insurance policy? The answer is not a simple yes or no. It's a maybe, wrapped in a it depends, hidden inside a you better know what you're signing up for. And that is exactly why this video exists. We are going to cut through the $400 million a year advertising budget, peel back the layers of marketing speak, and expose the raw truth. By the end of this deep dive, you will have a crystal clear understanding of their pricing, their actual coverage, and their real-world customer experience. You will be armed with the knowledge to decide if Liberty Mutual is the right partner to protect you and your family, or if you're just paying for their next Super Bowl commercial. To do this, we're not just going to read a few online reviews. We are going to systematically break down and judge Liberty Mutual on three critical pillars. The 3 P's of insurance: price, protection, and pain. How much does it cost? What do you actually get for your money? And how painful is it to use the service when you need it most? Let's start with the first, and for many people the most important pillar, price. Liberty Mutual's entire marketing strategy is built on the idea of customization and savings. Only pay for what you need. It sounds fantastic, doesn't it? It taps into that core American value of not wanting to waste a single dollar. They present themselves as the smart, flexible choice against the old, rigid insurance giants. But is that the reality? First, let's talk about the initial quote. When you go to their website, you're met with a slick, easy-to-use interface that can spit out a number in minutes. And often, that number looks pretty good. It might even be the lowest quote you've seen. But you have to ask yourself why? How are they getting that number so low? An insurance policy is a complex product, and the price is a reflection of risk. A dramatically lower price often means you're getting a dramatically different, and potentially weaker product. That customization they brag about can be a double-edged sword. It allows them to strip a policy down to its bare-bones state minimums, which in many states is terrifyingly inadequate. We're talking liability limits so low that a single moderate accident could financially ruin you for the rest of your life. So that great price you're seeing? It might be for a policy that offers an illusion of security, not the real thing. Next, let's talk about discounts. Liberty Mutual has a whole buffet of them. Good student discount, multi-policy discount, safe driver, new car, old car, anti-theft device. The list goes on. And this is where they hook a lot of people. But the most heavily advertised discount, the one that promises to reward you for your good driving, is their telematics program, RightTrack. Here's how it works. You either plug a small device into your car, or use their mobile app, and it monitors your driving habits. It tracks things like hard braking, rapid acceleration, total miles driven, and even the time of day you're on the road. Drive safely, they say, and you can earn up to a 30% discount. Sounds like a no-brainer, right? Not so fast. What you are doing is giving your insurance company an unprecedented amount of data about your life. You are handing them the keys to your privacy. They know where you go when you go there and how you drive to get there. And while they promise savings, many users report that the app is overly sensitive. A sudden stop to avoid a dog running into the street gets flagged as hard braking. Accelerating to merge safely onto a busy highway gets flagged as rapid acceleration. And guess what? While they advertise a discount in many states, this program can also be used to increase your rates if they don't like what they see. That up to 30% discount suddenly becomes a gamble where the house has all your data. But the most critical factor in Liberty Mutual's pricing is its variability. We analyzed rate data across dozens of zip codes and driver profiles, and the results were all over the map. For a 40-year-old driver with a perfect record and a paid-off Honda Accord in a quiet suburb, Liberty Mutual might be incredibly competitive. But for a 22-year-old with a new car loan, living in a dense urban area like Miami or Los Angeles, their rates can be astronomical, sometimes double or triple what competitors offer. Why? Because their pricing algorithm appears to be highly sensitive to specific risk factors. They might heavily penalize drivers with less than perfect credit scores. They might jack up rates significantly after even a minor at-fault accident. And here's the real kicker: something industry insiders call the loyalty penalty. You might think that being a loyal customer for 5 or 10 years would earn you the best rates. But that's not how the game is always played. Insurance companies know that switching providers is a hassle. So over time they may slowly creep your rates up, year after year, betting that you won't go through the trouble of shopping around. The new customer, the one they're trying to win over, often gets a better deal than the person who has been faithfully paying them for a decade. With Liberty Mutual, the price you get today is no guarantee of the price you'll have tomorrow. So when we look at the first pillar, price, the verdict on Liberty Mutual is complex. Can you get a cheap rate? Absolutely. But it may come at the cost of dangerously low coverage, a surrender of your personal privacy through programs like RightTrack, and the risk of significant rate hikes down the road, especially if you have a single slip-up or simply stay with them for too long. A low price is seductive. It's the easiest thing to compare. But it means nothing if the policy itself is a house of cards, ready to collapse the moment you actually need to file a claim. And that brings us to the second, and arguably the most important, pillar we must investigate: protection. What are you actually buying for that monthly premium? The answer to that question is where things get truly interesting. When you buy car insurance, you're not just buying a piece of paper. You're buying a promise. A promise that if the absolute worst happens, that sickening crunch of metal, the shattering of glass, the sudden violent stop, that a massive company has your back. You're buying peace of mind. But what does that promise from Liberty Mutual actually look like? Let's break it down, not with boring policy jargon, but with a real-world scenario. Imagine you're driving home on a rainy Tuesday. Let's call you Alex. You're doing everything right, hands at 10 and 2, going the speed limit. Suddenly, a car from a side street slides through a stop sign, right into your path. You slam on the brakes, but it's too late. You T-bone the other car. Both cars are a wreck. The other driver is complaining of neck pain, and their passenger looks shaken up. You feel a sharp pain in your wrist, and your chest hurts from the seatbelt. In this single terrifying moment, a cascade of financial consequences has just been triggered. This is where your insurance, your protection, is put to the test. First, let's talk about the other people, the driver and their passenger. This is where the most fundamental, legally required part of your policy kicks in: liability coverage. It's split into two parts. Bodily injury liability covers their medical bills, their lost wages if they can't work, and even their pain and suffering. If they decide to sue you, this is the coverage that pays for your legal defense and any settlement or judgment against you. Property damage liability covers the cost to repair or replace their crumpled car. Now, here's the first critical gut check for any policy, including one from Liberty Mutual. Look at your liability limits. They're usually written as 3 numbers, like 50/100/50. This means your policy would pay up to $50,000 for injuries to one person, a maximum of $100,000 for injuries to everyone in the other car combined, and up to $50,000 to fix their property. Sounds like a lot, right? But think about our accident. An ambulance ride, an emergency room visit, a few MRIs, and physical therapy can obliterate that $50,000 limit for a single person in a heartbeat. And what if the car you hit wasn't a 10-year-old sedan, but a brand new luxury SUV or a work truck full of expensive equipment? That $50,000 property damage limit could be exhausted before the tow truck even leaves the scene. Anything above those limits? That comes out of your pocket, your savings, your home equity, your future. This is why choosing only the state minimum liability coverage is one of the most dangerous financial gambles a person can make. Liberty Mutual, like all major carriers, allows you to select much higher limits, and the cost to go from mediocre protection to excellent protection is often surprisingly small. Okay, so we've covered the other car. But what about you and your car? Your liability coverage does absolutely nothing for you. This is where the next layers of protection come in, and it's where Liberty Mutual starts to differentiate itself. First, your car. If you have a loan or lease, the bank requires you to have two key coverages: collision and comprehensive. Collision coverage is what pays to fix your car after our rainy Tuesday accident, regardless of who was at fault. You hit another car, a tree, a guardrail, collision has your back. You'll have a deductible, say $500 or $1,000, which is the amount you pay out of pocket before the insurance money kicks in. Comprehensive coverage is sometimes called acts of God coverage. It's for almost everything else. A tree branch falls on your car during a storm. A deer decides to play chicken with your front bumper on a country road. Your car is stolen. A hailstorm makes the roof of your car look like a golf ball. All of that is covered by comprehensive, again, after your deductible. Now let's talk about you. Remember that sharp pain in your wrist? This is where medical payments coverage, or MedPay, comes in. In some states, it's called personal injury protection, or PIP. This is a fantastic coverage because it pays for your medical bills and those of your passengers up to a certain limit, no matter who was at fault for the accident. It's immediate. You don't have to wait for the insurance companies to fight it out and determine fault. You go to the doctor, you send the bill to your insurance, and it gets paid. It can cover health insurance deductibles, copays, and things health insurance might not cover, like dental work if you injured your teeth. But what if the other driver, the one who ran the stop sign, had no insurance at all? Or what if they only had the bare minimum state-required coverage that we just talked about? This is a terrifyingly common scenario. That's where uninsured and underinsured motorist coverage becomes your absolute hero. If an uninsured driver injures you, this coverage steps in and acts like their liability insurance, paying for your medical bills, lost wages, and pain and suffering. If they are underinsured, it means their policy limits aren't enough to cover your bills. Your underinsured motorist coverage will then kick in to cover the difference, up to your own policy limits. It protects you from the irresponsible choices of others. Okay, that's the standard playbook for car insurance protection. You can get that package from pretty much any major company. So where does Liberty Mutual try to stand out? It's in their optional, unique coverages that address some of the biggest frustrations people have after a major accident. Let's start with one of their flagship features: better car replacement. This is a game changer. Let's say in our accident, your 5-year-old car with 80,000 miles is declared a total loss. Normally, insurance would give you the actual cash value of that car, which is the depreciated value right before the crash. You get a check, and you're left trying to find a similar 5-year-old car with 80,000 miles. But with better car replacement, Liberty Mutual will give you the money to buy a car that is one model year newer and has 15,000 fewer miles on it. Think about that. Your car is totaled, and your insurance helps you buy a better car than the one you just lost. For anyone who doesn't drive a brand new car, this is an incredibly powerful feature that turns a devastating loss into a potential upgrade. For those who do drive new cars, there's new car replacement. We all know a new car loses thousands of dollars in value the second you drive it off the lot. If your brand new car gets totaled in its first year, standard insurance would only pay you that new depreciated value, leaving you with a huge gap between what they pay you and what you still owe on the loan. With new car replacement, if your car is totaled within the first year and first 15,000 miles, Liberty Mutual will pay for a brand new car, not just the depreciated value. It completely erases that initial depreciation hit. Then there's accident forgiveness. This is a big one for peace of mind. Many companies offer it, but Liberty Mutual's is straightforward. If you've been accident-free and violation-free with them for 5 straight years, your first accident won't cause your rates to go up. It's a loyalty reward. It's them saying, hey, you've been a great safe driver for a long time. Everyone makes one mistake. We're not going to punish you for it. And of course, they offer the other add-ons you'd expect. Rental car reimbursement is crucial. If your car is in the shop for 2 weeks after our accident, how do you get to work? To the grocery store? This coverage pays for a rental car so your life doesn't grind to a halt. They also offer 24-hour roadside assistance for towing, jump starts, and flat tires. Now, it is absolutely critical to understand that these best-in-class features, better car replacement, new car replacement, accident forgiveness, are not standard. They are optional add-ons. You have to choose them and you have to pay for them. They will increase your premium. But this is the core of the value proposition. Liberty Mutual gives you the option to build a policy that is far more robust than a standard, bare-bones plan. You can create a safety net that not only covers the basics but actively works to make your life easier and better after a catastrophic event. So, when we look at the pillar of protection, Liberty Mutual presents a very compelling case. They offer all the standard coverages you need, with the flexibility to choose high limits. But their real strength lies in these unique, optional benefits that address the real-world headaches of a major claim. They seem to have thought about what people truly fear: losing money on a new car, being forced into a worse car, having their rates skyrocket after one mistake, and they've created products to solve those specific problems. The promise on paper is strong, but a promise is only as good as the company that makes it. Now that we know what Liberty Mutual says they will protect, we have to ask the multi-million-dollar question. When you call that 1-800 number from the side of the road, shaken and scared, how do they actually perform? What is the reality of the Liberty Mutual claims experience? That is where we turn next. It's a story I've heard 100 times in 100 different ways. A client, let's call him David, is sitting at a red light on a Tuesday afternoon. Out of nowhere, a massive jolt. The sound of crunching metal and shattering glass. He's been rear-ended. Hard. He's shaken, his neck is already starting to ache, but he's okay. His car, a 3-year-old SUV he loves, is not. The entire back end is caved in. He does exactly what he's supposed to do. He calls the police, exchanges information, and then he opens his Liberty Mutual app. On paper, this is where the magic is supposed to happen. Liberty Mutual, like all modern insurers, sells a vision of a seamless, tech-driven claims experience. You can file a claim in minutes from your phone, upload photos of the damage right at the scene, track your claim's progress 24/7 through a digital portal. A friendly, empathetic adjuster is supposed to call you, guide you through the process, and get you back on the road. It's a promise of efficiency, of technology smoothing over one of the most stressful experiences a person can have. And for David, the first 24 hours felt exactly like that. He filed the claim, got a claim number, and even got a quick call from an initial representative who assured him everything was under control. He felt a wave of relief. He thought, this is why I pay my premiums. They've got my back. And then silence. The next few days were a masterclass in frustration. His assigned adjuster wouldn't return his calls. The online portal simply said "in progress" with no new information. He needed a rental car to get to work, but couldn't get approval. When he finally got a hold of someone, it was a different person who had to look up his file. This is the first and perhaps most common crack that appears in the Liberty Mutual claims experience: the communication breakdown. You go from feeling like their most important customer to feeling like a forgotten ticket in a massive, understaffed system. Dig through any forum, any review site, from the Better Business Bureau to Reddit, and you will see this pattern emerge again and again. It's the story of being passed from one adjuster to another, having to re-explain your situation multiple times. It's the story of emails going unanswered and voicemails disappearing into a black hole. While some customers report a fantastic single point of contact who is responsive and helpful, a significant number describe a process that feels disjointed and impersonal, where they are the ones constantly having to chase down the company they pay to protect them. This isn't just an inconvenience. It's emotionally draining at a time when you're already vulnerable. Now, let's say you get past the communication hurdles. The next major battleground is valuation. How much is your car worth, and how much will they pay for repairs? For David, after a week of waiting, an appraiser finally declared his SUV a total loss. And then came the offer. It was thousands of dollars below what he saw similar models selling for online. It was an offer so low it wouldn't even cover what he still owed on his car loan, let alone help him buy a comparable replacement. This is where many customers feel the true squeeze. Insurance companies, including Liberty Mutual, use third-party software, often a system called CCC1, to determine a vehicle's value. This software scours databases of recent sales of similar vehicles in your area. In theory, it's objective. In practice, it can feel like a black box designed to produce the lowest possible number. The comparable vehicles it finds might have higher mileage, fewer options, or be from less reputable dealerships. The fight that ensues is one most people are unprepared for. You, the customer, are now expected to become a car valuation expert, spending hours researching and providing your own evidence, your own comps, to argue for a fair price on the vehicle you lost. It's a grueling uphill battle. And what if your car isn't totaled? What if it's just being repaired? This opens up a whole new can of worms. Liberty Mutual has what they call their Guaranteed Repair Network. These are body shops they have a direct relationship with. If you use one of their shops, the process can be smoother. The shop bills the insurance directly, and the work is guaranteed. But there's a catch. Customers often report feeling pressure to use these network shops, even if they have a trusted local mechanic they've used for years. And the real conflict comes down to parts. To keep costs down, insurers often specify the use of aftermarket or like-kind and quality parts instead of original equipment manufacturer, or OEM parts, the ones made by your car's manufacturer. While some aftermarket parts are fine, others can have issues with fit, finish, and quality. Imagine getting your car back from the shop and the new bumper's paint doesn't quite match, or a headlight has a gap around it that wasn't there before. The battle over OEM versus aftermarket parts is a constant source of friction between customers, their independent body shops, and the insurance adjuster, often leading to significant delays and compromises in the quality of the repair. Now, it is crucial to state that this is not everyone's experience. To be fair, we have to look at the other side of the coin. For simple, straightforward claims, Liberty Mutual's system can work beautifully. Got a cracked windshield? Many customers report a quick, painless process through their glass partner, SafeLight, often with no deductible. A minor fender bender with clear fault and no injuries? The app-based photo estimating tool can get you a check in a matter of days. In these scenarios, the tech-forward approach they advertise truly shines. The system is designed for high-volume, low-complexity claims, and in that arena, it often performs well. The problem is, car accidents are rarely simple or low complexity. They are messy, stressful, and deeply personal. And when things get complicated, that's when the system's weaknesses are exposed. So what's the final verdict on the Liberty Mutual claims experience? It's a tale of two companies. There's the efficient, app-driven insurer that can resolve your minor claim before you've even finished your coffee. And then there's the bureaucratic behemoth that can leave you feeling lost and undervalued during one of the worst weeks of your life. The outcome seems to depend heavily on the severity of your accident, the state you live in, and frankly, the luck of the draw and the quality and caseload of the adjuster assigned to you. It's a gamble. Sometimes you win and the process is painless. But when you lose, the frustration can be immense, leaving you to question what you were even paying for all those years. This inherent uncertainty in the claims process, the very moment of truth for any insurance company, is a massive factor to consider. But it's only one half of the equation. Because before you ever have a claim, you have a bill. A premium that you have to pay month after month, year after year. So if the service you get in a crisis is a roll of the dice, how does the price you pay up front compare? Is Liberty Mutual a budget-friendly option, a premium price player, or somewhere in between? How do they really stack up when you put their quotes side by side with Progressive, Geico, and the rest of the giants? That's where we need to look at the cold, hard numbers. Alright, let's dive into those cold, hard numbers. But here's the first thing you absolutely have to understand about car insurance pricing. There is no such thing as the price. Asking, how much does Liberty Mutual cost? Is like asking, how much does a bag of groceries cost? The answer is always, well, it depends what's in the bag. Your age, your car, your zip code, your driving history, your credit score. These are all items in your personal grocery bag, and every single insurance company weighs them differently. So, to get a real, tangible answer, we can't just look at national averages. That's lazy and it doesn't help you. Instead, we have to create specific scenarios like a virtual crash test for your wallet. We're going to build 3 distinct driver profiles, representing a huge chunk of the American population, and get quotes for each of them from Liberty Mutual and 3 of their biggest competitors, Geico, Progressive, and State Farm. This is where the rubber meets the road. Let's start with our first driver. We'll call him Alex. Alex is 22 years old, single, and lives in a decent-sized city, let's say Denver, Colorado. He's driving a paid-off 2019 Honda Civic, a super common car for someone his age. Now, Alex is a good kid, but he's not perfect. He has 1 speeding ticket on his record from about 18 months ago. He's looking for standard liability coverage plus collision, and comprehensive with a $1,000 deductible. He's the classic young driver profile that insurance companies see as a higher risk. We run the quotes. Geico comes in first, as they often do for younger single drivers. Their 6-month premium for Alex is around $950. Progressive is right behind, a little over $1,000. Then we have a bigger jump. State Farm quotes him at around $1,300. And Liberty Mutual? They come in at the top of this group, quoting Alex a 6-month premium of almost $1,450. Immediately you're thinking, wow, Liberty Mutual is crazy expensive. And for this specific profile, a young driver with a minor infraction, you'd be right. Why? Because different companies have different appetites for risk. Geico's entire business model is built on attracting a massive volume of drivers, and they often use very competitive pricing for these straightforward, single-policy customers to get them in the door. Liberty Mutual, on the other hand, might see Alex's age combined with that speeding ticket, and their algorithm flags him as a significantly higher risk. They're not saying they don't want his business, but their price reflects the level of risk they're willing to take on. For Alex, shopping around is critical, and Liberty Mutual probably isn't his winning ticket. But let's not stop there. One profile isn't the whole story. Let's introduce our second scenario, the Millers. This is a married couple, both 42 years old, living in a suburb outside of Charlotte, North Carolina. They have 2 kids, a spotless driving record, and excellent credit. They own their home and have 2 cars, a 2022 Toyota Highlander for the family trips and a 2020 Ford F-150. They're looking for higher liability limits than Alex, and they want to bundle their home and auto insurance together. This is the ideal customer for many insurance companies. Now we run the quotes again, this time for the combined home and auto bundle. The results are completely different. State Farm, with its strong agent network and focus on homeowners, offers a very competitive bundle at around $2,200 for a 6-month auto policy and a 12-month home policy combined. Geico, who was the champion for Alex, is less competitive here. Their bundle comes in closer to $2,600. Progressive is strong as always, right around $2,300. And Liberty Mutual? This is their sweet spot. They come in with a powerhouse offer of $1,950 for the combined policies. A complete reversal from our first scenario. Suddenly, they're not the most expensive, they're the most affordable by a significant margin. What happened? The power of the bundle. Liberty Mutual's entire strategy is heavily geared towards the multi-policy customer. Their discounts for bundling home and auto, plus having multiple cars, are some of the most aggressive in the industry. They see the Millers not as a single risk, but as a stable, long-term, profitable household. They're willing to give a massive discount on the car insurance to secure the more stable, and often more profitable, home insurance policy. For the Millers, choosing Liberty Mutual could save them over $600 a year compared to Geico. It's a total game changer, and it proves that the best insurer is entirely dependent on your life situation. Okay, let's do one more. Let's meet Susan. Susan is 68 years old, retired, and lives in a quiet town in Florida. She drives a 2021 Lexus RX 350. Her driving record is immaculate. We're talking 0 accidents or tickets in over 25 years. She drives less than 5,000 miles a year, mostly to the grocery store, her book club, and to visit her grandkids. She's the definition of a low-risk, experienced driver. She doesn't have a home to bundle, as she lives in a condo where the association covers the main policy. We run the quotes for just her auto insurance, with good coverage and a $500 deductible. The numbers shuffle again. State Farm, known for rewarding customer loyalty and long-term safe driving, gives Susan a fantastic rate of $550 for 6 months. Geico is also very strong for this profile, coming in at around $580. Progressive is a bit higher, around $650. And where does Liberty Mutual land? They quote Susan a rate of about $700 for the 6-month premium. So, they're not the most expensive, but they're certainly not the cheapest. They're about 25% more expensive than State Farm for this specific person. Why? While Susan is low risk, she doesn't fit into Liberty Mutual's ideal bundling box. Furthermore, companies like State Farm and others have spent decades cultivating the senior market, sometimes offering specific programs or having pricing models that heavily favor long, uninterrupted histories of safe driving. Liberty Mutual has good safe driver discounts, but their algorithm might not weigh that 25-year clean streak as heavily as another company's does. For Susan, the value proposition isn't there on price alone. She could save $300 a year by going with the competition. So what have we learned from these 3 very different stories? We've learned that Liberty Mutual's pricing is like a targeted weapon, not a shotgun blast. For young, single drivers like Alex, it's often not going to be the most competitive. Their algorithm seems to be more cautious with that demographic. For seasoned, safe drivers with a single policy like Susan, they're likely to be a solid but not the cheapest option. But for the family in the middle, the homeowners, the multi-car households, the people who represent the core of the American dream, that's where Liberty Mutual puts its money where its mouth is. Their aggressive bundling discounts can catapult them from a premium-priced option to the most affordable choice on the market. Their goal isn't necessarily to be the cheapest for everyone. It's to be the most compelling value for a specific type of customer who is putting down roots and has more to protect. So when you see a commercial and hear a jingle, remember this. The price they'll offer you has nothing to do with the ad and everything to do with your life story. The real question isn't just about the final number on the quote, though. Price is what you pay, but value is what you get. A cheaper policy isn't better if it disappears when you need it most. This brings us to the next critical piece of the puzzle: the actual product. What are you getting for your money? What are the unique coverage options that Liberty Mutual offers that others don't? And which ones are just clever marketing? We need to look beyond the price tag and inspect the policy itself. So let's do that. Let's rip open a standard Liberty Mutual policy and see what's inside. At the core, you have the big three, the absolute bedrock of any car insurance policy in America: liability, collision, and comprehensive. Think of this as the foundation of your house. Without it, everything else is pointless. Liability is the one that's not for you. It's for everyone else. If you cause an accident, this is what pays for the other person's car repairs and their medical bills. Every state, except for a couple of weird exceptions, requires you to have this. Skimping on liability is like playing financial Russian roulette with every single drive. You could be on the hook for hundreds of thousands of dollars from a single moment of distraction. Liberty Mutual's liability coverage is standard, nothing revolutionary here. But it's the price of admission to legally be on the road. Next is collision. This is the one that's for you. It pays to repair or replace your car if you hit something. Another car, a pole, a guardrail. It doesn't matter whose fault it is. You back into a parking garage pillar? Collision coverage. You swerve to miss a deer and hit a tree? Collision coverage. This is what most people think of when they think of full coverage. And rounding out the trifecta is comprehensive. This is for almost everything else. Think of it as the acts of God and criminals coverage. A hailstorm turns your hood into a golf ball? Comprehensive. A tree branch falls on your roof during a storm? Comprehensive. Your car gets stolen? Comprehensive. It's the coverage for the chaos you can't control. Now here's the thing. Every major insurer, Geico, Progressive, State Farm, offers these three. They might call them slightly different things, but the concept is identical. This is the commodity. This is the baseline. If Liberty Mutual only offered this, there would be no reason to make this video. The real question, the reason you're watching, is what they build on top of that foundation. What are the unique features, the special add-ons that are supposed to make them stand out? Let's call them the Liberty Mutual exclusives. And this is where you need to pay very close attention. First up, the one you've probably heard of: accident forgiveness. The promise is simple and incredibly seductive. You have one at-fault accident, and we'll pretend it never happened. Your rates won't go up. It sounds like a get-out-of-jail-free card. But is it? With Liberty Mutual, this isn't a gift they just hand out. First, you have to qualify for it. This typically means you have to have been accident-free and violation-free with them for a set number of years, usually 5. Second, you have to pay for it. It's an extra endorsement on your policy, which means your premium is higher from day one. You are prepaying for the possibility of a future mistake. If you go another 10 years without an accident, you've paid extra for a benefit you never used. However, if you have a teenage driver on your policy, or if you just feel statistically due for a mishap, it can be a financial lifesaver. A single at-fault accident can spike your rates by 30, 40, even 50% for 3 to 5 years. Do the math on that, and suddenly the small extra premium for accident forgiveness can look like one of the smartest bets you've ever made. It's not a gimmick, but it's a calculated gamble. Next, we have two of their most compelling features: new car replacement and better car replacement. This is where Liberty Mutual really starts to differentiate itself. Let's start with new car replacement. This is fairly common in the industry, but their version is solid. If your brand new car, typically less than a year old and with fewer than 15,000 miles, is totaled, they won't just give you its depreciated cash value. They'll give you the money for a brand new, same model year car. This is huge. A new car loses thousands of dollars in value the second you drive it off the lot. Getting into an accident a few months later could leave you with a check that's not even enough to pay off your auto loan. New car replacement solves that upside-down problem. But here's their real ace in the hole: better car replacement. This is much rarer, and it's a brilliant piece of product design. Let's say your car is not brand new. Let's say you drive a 4-year-old Toyota Camry with 50,000 miles. You love it, it's reliable, but it's not new. If it gets totaled, most insurance companies will hand you a check for the actual cash value of a 4-year-old Camry with 50,000 miles. Good luck finding that exact car for that exact price. You'll likely end up having to buy an older car or one with more miles. But with Liberty Mutual's better car replacement, they will pay for you to get a replacement car that is 1 model year newer and has 15,000 fewer miles on it. Let that sink in. Your 4-year-old car with 50k miles is destroyed, and your insurance helps you buy a 3-year-old car with only 35k miles. You end up in a better situation than you were in before the accident. This is a powerful, tangible benefit that directly combats the feeling of being shortchanged after a total loss. Of course, like accident forgiveness, this is an optional add-on that costs extra. It's not available for every car or every driver, but if it's offered to you, it's one of the most compelling reasons to consider Liberty Mutual. Then there's the Liberty Mutual Deductible Fund, or what other companies sometimes call a vanishing deductible. The idea is to reward you for safe driving. You pay a little extra each year for this feature. For every year you go without a claim, Liberty Mutual reduces your collision deductible by $100. If your deductible is $500 after 5 years of claim-free driving, it could be zero. You get into an accident and you pay nothing out of pocket for the repair. It sounds fantastic, but again, let's look closer. You're paying an extra premium for this. Let's say it's an extra $30 per year. Over 5 years, you've paid an extra $150 to save $500 on a potential future claim. That's a good return on investment. If you have a claim, if you go 10 years without a claim, you've paid $300 for a benefit you haven't used. It's a bit like a forced savings plan for your deductible. For people who struggle to have that $500 or $1,000 emergency fund sitting around, it can be a brilliant way to ensure you're covered. For disciplined savers, you might be better off just putting that extra premium money into your own high-yield savings account each year. Finally, let's touch on their lifetime repair guarantee. This is another marketing home run. They promise that if you use one of their approved body shops for a claim repair, they will guarantee the work for as long as you own the car. Paint peeling a year later? They'll fix it. A part they replace fails? They'll fix it. This offers incredible peace of mind. The catch? You have to use a shop in their network. You don't get to take it to your trusted local mechanic you've been using for 20 years, unless he happens to be in their network. For many people, this is a great trade-off. They don't have a trusted mechanic, and the guarantee is worth more than the freedom of choice. For others who are very particular about who works on their car, especially if it's a specialty or luxury vehicle, this could feel restrictive. It's a guarantee of quality, but within a walled garden. So you can see, Liberty Mutual has moved far beyond the basic, boring coverage. They've created a suite of products designed to solve specific, painful problems for car owners. The fear of a rate hike, the financial sting of a total loss, the burden of a high deductible, and the worry of shoddy repair work. These aren't just marketing fluff. They are real, functional policy add-ons that can provide immense value. But they all come at a cost, both in terms of your premium and sometimes in terms of your choices. The key is understanding that you're not just buying car insurance. You're building a customized safety net. And the strength and features of that net depend entirely on the options you choose to pay for. Now that we know what we can buy, the billion-dollar question remains. How does Liberty Mutual stack up on price? How do they determine what you actually pay? And how can you get all these benefits without breaking the bank? That's where we dive into the world of discounts and the algorithms that decide your fate. So let's pull back the curtain on the price tag. The first thing you need to understand about car insurance pricing is that it's less like buying a product off a shelf and more like getting a custom-tailored suit. No two people will ever pay the exact same price because the fabric of your life is unique. And Liberty Mutual, like every other major insurer, is a master tailor, using a complex algorithm to measure every single aspect of your risk profile. First, let's address the elephant in the room. Is Liberty Mutual expensive? The honest, if frustrating, answer is sometimes. If you just go to their website and plug in the bare minimum information, you might get a quote that makes your jaw drop. They often don't lead with their most competitive price. Why? Because they're banking on you engaging with their system, providing more data, and unlocking the discounts that bring the price down to reality. They want to reward the customers they see as low risk, and they need information to figure out if that's you. So what are they looking at? What are the key ingredients in this pricing recipe? First up, the basics, your demographics. This is the stuff you can't change. Your age is a huge factor. A 22-year-old male is, statistically speaking, a much higher risk than a 45-year-old married woman, and the premium will reflect that. It's not personal. It's pure, cold, hard data aggregated from millions of drivers over decades. Your marital status also plays a role. Insurers have found that married individuals tend to file fewer claims. Next, and this is one of the most powerful factors, is your location. I'm not just talking about your state. I mean your specific zip code. You could move 5 miles down the road to a different zip code and see your insurance premium swing by hundreds of dollars a year. Why? Because that new zip code might have a higher rate of vehicle theft, more vandalism, more traffic congestion leading to accidents, or even higher costs for car repairs at local body shops. They are insuring you against the risks of your environment, not just your own driving. Then, of course, there's the one you know all about, your driving record. This is your personal driving report card. Any speeding tickets, at-fault accidents, or God forbid, a DUI will send your rates soaring. A clean record, on the other hand, is your golden ticket. It's the single best piece of evidence you can provide that you are a safe, responsible driver. But here's one that trips a lot of people up, your credit score. Now you might be thinking, what does my credit card debt have to do with my ability to merge onto a highway? It's a fair question. Insurers don't use your FICO score directly. Instead, they use the information in your credit report to generate what's called a credit-based insurance score. The logic, backed by their data, is that individuals who manage their finances responsibly are also more likely to be responsible in other areas of their life, like maintaining their car and driving safely. It's a controversial metric, and some states have even banned or limited its use, but in most of the country, it has a significant impact on your premium. A good credit score can save you a fortune. And naturally, the car you drive matters. A brand new high-performance sports car is going to cost a lot more to insure than a 10-year-old Honda Civic. The algorithm looks at the car's sticker price, the average cost of repairs, its safety ratings, and how often that particular model is stolen. A car packed with advanced safety features might cost more to buy, but it could actually save you money on your insurance. So Liberty Mutual's algorithm takes all of this, your age, your address, your driving history, your credit, your car, and blends it together to produce your base rate. If you stop there, you're probably going to overpay. The real key to getting a good price from Liberty Mutual is to aggressively attack that base rate with every single discount you can possibly qualify for. This is where you can take control. Let's break down the armory of discounts Liberty Mutual offers. Think of these in categories. First, there are the easy win discounts. These are the no-brainers. Buying your policy online? There's a discount for that. Signing up for paperless billing? Discount. Paying your entire 6 or 12-month premium upfront instead of monthly? That's a big one. Setting up automatic payments from your bank account? Yep, another discount. These are simple administrative choices that prove to Liberty Mutual you're organized and reliable, and they'll shave a nice little percentage right off the top. Next are the good citizen discounts. Are you a homeowner? Even if you don't insure your home with them, just owning a home can get you a discount because, again, it suggests stability. Are you in the military, active duty, or retired? Liberty Mutual has a significant military discount to thank you for your service. Have a student on your policy who's getting good grades? The good student discount can be a lifesaver for parents insuring a teen driver. If that student goes away to a college over 100 miles away and doesn't take a car, the student away at school discount kicks in. Then we get to the big one, the king of all discounts, the multi-policy or bundling discount. This is central to Liberty Mutual's strategy. They want to be your one-stop shop for insurance. If you bundle your auto insurance with a home insurance or renter's insurance policy, you can see savings of up to 30%. This is often the single biggest discount you can get, and it can dramatically change the value equation, often making Liberty Mutual one of the most competitive options on the market if you need both types of coverage. But we're not done. There are vehicle-specific discounts. Does your car have anti-lock brakes, airbags, and automatic seatbelts? Those standard features earn you a small discount. Does it have more advanced safety features, like lane departure warnings, blind spot monitoring, or adaptive cruise control? That's another discount. Have an anti-theft device, whether it's a passive alarm or an active tracking system. You guessed it, discount. And finally, we arrive at the most modern, most powerful, and perhaps most controversial way to save money, telematics. Liberty Mutual's program is called RightTrack. This is where you voluntarily agree to let the company monitor your driving habits through a smartphone app or a small device you plug into your car. It tracks things like your total mileage, the time of day you drive, and most importantly, your driving behaviors, how often you brake hard, how rapidly you accelerate. Promise is huge. Just for signing up, they give you an initial discount. Then, after a 90-day review period where the app gathers data, they calculate your final discount, which can be up to 30%. If you are a genuinely safe driver who doesn't speed, avoids late-night driving, and is smooth on the gas and brakes, RightTrack can offer you a premium that is almost unbeatable, because it's based on your actual driving, not just the statistical profile of a person like you. Of course, there's a trade-off. It's a question of privacy. You're giving an insurance company a direct window into your daily movements. For some, that's a deal breaker. For others who are confident in their safe driving and are looking for every possible way to save money, it's a fantastic tool. It's the ultimate way to prove to that cold, calculating algorithm that you are the exception, that you are the low-risk driver they want as a customer. So you see, the price from Liberty Mutual isn't a fixed number. It's a starting point. It's a puzzle. By understanding the factors they care about and strategically applying every discount you're eligible for. From paperless billing to bundling to proving you're safe driving with RightTrack, you can fundamentally change the outcome. You can take a quote that seemed outrageously high and sculpt it into something incredibly competitive. But this brings us to the most critical question of all. Let's say you do all this. You play the game, you stack the discounts, and you get a fantastic rate. What happens when you actually need the insurance? What happens when a rock cracks your windshield or, even worse, you're in a serious accident? Does that great price come at the cost of a terrible claims experience? Because a cheap policy that doesn't pay out when you need it isn't a bargain. It's worthless. The true test of any insurance company isn't how much they charge you, but how they treat you on the worst day of your life. And that's exactly where we're going next. When you file a claim, you're not a customer anymore. You're a liability. You're a line item on a balance sheet, a number that needs to be managed. And how a company manages that number reveals its true character. So let's pull back the curtain on Liberty Mutual's claims process. We'll look at the hard data, the industry rankings, and most importantly, the real-world stories from people who have been there. Every year, J.D. Power conducts a massive U.S. auto claim satisfaction study. It's the industry benchmark. They survey thousands of real customers who have recently filed claims and rank insurers on a 1,000-point scale. They look at everything. The initial report of the accident, the interactions with the claims professionals, the settlement process, and the repair process. It's incredibly thorough. So where does Liberty Mutual land? Well, it's complicated. In the most recent study, Liberty Mutual scored 870 out of 1,000. Now, you might hear 870 and think, hey, that sounds pretty good. That's like a high B. But in the world of insurance, context is everything. The industry average score was 873. So Liberty Mutual is sitting just a hair below average. They aren't at the bottom of the barrel, not by a long shot. Companies like Allstate and Farmers scored lower. But they are significantly behind the top performers like Amica Mutual, which consistently scores above 900. What this tells us is that, on the whole, Liberty Mutual provides a slightly subpar claims experience compared to its peers. It's not a catastrophic failure, but it's not a shining beacon of excellence either. It's aggressively average. But averages can be deceiving. An average can hide incredible highs and devastating lows. For every person who has a perfectly acceptable experience, there's someone else living a nightmare. The data gives us the what, but the stories give us the why. Let's imagine a best-case scenario, one that reflects the positive reviews you'll find. Let's call our driver Sarah. Sarah is sitting at a red light when she's rear-ended. It's a clear-cut case. The other driver is 100% at fault. Shaken, she pulls over and calls the number on her Liberty Mutual insurance card. She gets a human on the line in under 2 minutes. The agent is calm, empathetic, and walks her through exactly what to do. Get the other driver's information, take photos, and make sure to file a police report. She uses the Liberty Mutual app, right there on the side of the road, to start her claim and upload the photos. Before she's even gotten home, she receives a text message with her claim number and the name of her assigned adjuster. The next morning, her adjuster, a guy named David, calls her. He's already reviewed the police report and the photos. He says, "Sarah, this is an open and shut case. We've accepted full liability. Let's get your car fixed and get you a rental." He gives her a list of pre-approved, highly rated body shops in her area, but also tells her she's free to choose her own. He arranges for a rental car to be delivered to her house that afternoon. The body shop handles everything directly with Liberty Mutual. A week later, her car is back good as new. The entire process was seamless, fast, and stress-free. Sarah is so impressed. She tells all her friends how great Liberty Mutual was. This is the experience Liberty Mutual sells you in their commercials. This is the promise. But then there's the other side of the coin. The experience that leads to those below-average J.D. Power scores. Let's call this driver Mark. Mark is in a more complex accident. A car runs a stop sign, T-bones him, and pushes his car into a third vehicle. It's a mess. He calls Liberty Mutual, and after navigating a phone tree for 10 minutes, he finally gets a representative who takes his information and assigns him a claim number. He's told an adjuster will call him within 24 to 48 hours. 48 hours go by. Nothing. He calls back. He's on hold for 30 minutes. The new representative can't find his adjuster's direct line and says they'll send a message. The next day he finally gets a call. The adjuster is polite but sounds rushed. She says because it's a multi-car accident with disputed fault, their investigation will take time. They won't approve a rental car until liability is determined. Mark, who needs his car for work, is now forced to pay for a rental out of his own pocket, hoping he'll be reimbursed later. Weeks turn into a month. Mark feels like he's the one doing all the work. He leaves voicemails for his adjuster that go unreturned for days. When he does get her on the phone, she has no new information. He gets passed from the adjuster to the total loss department, then to a subrogation specialist. Every time he talks to someone new, he has to retell the entire story from the beginning. They lowball the value of his totaled car, offering him thousands less than its Kelley Blue Book value. He has to spend hours researching comparable vehicles for sale just to prove his car is worth more. The whole process is a draining, full-time job of fighting his own insurance company, the very company he paid to protect him. This is the experience that people fear, the one that fuels one-star reviews and furious posts on Reddit. So which experience is the real Liberty Mutual? The smooth, efficient process Sarah got, or the bureaucratic nightmare Mark endured? The answer is both. And we can see this reflected in another crucial piece of data: the NAIC Complaint Index. The National Association of Insurance Commissioners, or NAIC, tracks all consumer complaints filed against insurance companies. They then create a complaint index. The baseline is 1.0. An index of 1.0 means a company received the expected number of complaints for its size. An index below 1.0 is good. It means they get fewer complaints than their competitors. An index above 1.0 is a major red flag. Liberty Mutual's complaint index for private passenger auto insurance is currently 2.27. Let me repeat that. 2.27. That means Liberty Mutual receives more than double the number of complaints expected for a company of its massive size. This isn't a small deviation. It's a significant, statistically important signal that a large number of customers are having experiences closer to Mark's than to Sarah's. And what are they complaining about? The top categories are exactly what you'd expect: delays in claim handling, unsatisfactory settlement offers, and outright denial of claims. It paints a picture of an organization that, at least for a significant portion of its customers, is slow, difficult to deal with, and potentially unfair when it comes time to pay up. Now, to be fair, a massive company like Liberty Mutual handles millions of claims. Even if they handle 98% of them perfectly, that remaining 2% still represents tens of thousands of unhappy people. And unhappy people are always much more motivated to file a complaint than happy people are to send a letter of praise. But even with that grain of salt, an index of 2.27 is hard to ignore, especially when you compare it to competitors. Progressive's index is 1.25. Geico's is 1.13. And a top-rated company like Amica? Theirs is 0.43. They get less than half the expected complaints. The numbers tell a story, and right now they're not telling a flattering one for Liberty Mutual. So we're left with this paradox. A company that is financially stable, offers a ton of discounts and coverage options, yet seems to fumble the ball on the most important play of the game: the claim itself. You have a below-average J.D. Power score, and a complaint index that's more than double the national median. It suggests a systemic issue. It could be that their adjusters are overworked, that their internal processes are inefficient, or that their corporate culture prioritizes cost-cutting on claims over customer satisfaction. The reality is, your experience will likely come down to the luck of the draw, the complexity of your accident, and the quality of the individual adjuster assigned to your case. But when you're paying for insurance, you're not paying for a lottery ticket. You're paying for a guarantee, promise. And the data suggests that with Liberty Mutual, that promise is less certain than it is with many of their top competitors. This massive variation in experience, from excellent to abysmal, often hinges on one thing: communication. How easy is it to get the right person on the phone? How good are the digital tools they provide, like the app and the website, at keeping you in the loop? Because when your car is wrecked and your life is turned upside down, silence and confusion are your worst enemies. So, just how good is Liberty Mutual's customer service and technology when you're not filing a claim, but just trying to manage your policy or ask a simple question? Is their tech a helpful tool? Or just another source of frustration? That's where we're going next. Let's start with the digital front door: the Liberty Mutual mobile app and website. In today's world, this is often your primary point of contact with an insurance company. The promise is seductive, isn't it? Manage your entire policy from the palm of your hand, 24/7, no waiting on hold. And on the surface, Liberty Mutual's app looks clean and modern. It offers the essentials you'd expect: access to your digital ID cards, the ability to pay your bill, and a portal to start a claim. For these basic, everyday tasks, it generally works. Pulling up your ID card when you're unexpectedly asked for it at the DMV? The app has your back. Making a quick payment before the due date? A few taps and you're done. This is the convenience we've all been sold, and in these moments it delivers. But the moment your needs become even slightly more complex, the cracks in this digital facade begin to show. Imagine this scenario. It's a Saturday afternoon. You've just bought a new car, and you want to add it to your policy so you can drive it off the lot. This is a perfect job for the app, right? You open it up, navigate to add a vehicle, and start plugging in the information: VIN number, make, model. And then you hit a snag. Maybe the app glitches and won't accept the VIN. Or maybe it gives you a quote that seems astronomically high, with no clear explanation as to why. You try again, thinking you made a mistake. Same result. Now, frustration is setting in. The app, which was supposed to be your shortcut, has become a roadblock. You search for a chat function, hoping for a quick answer. Some users report finding it easily and getting fast help. Others say it's buried, or that they end up with a bot that can only answer the most basic, pre-programmed questions. So you're stuck. The dealership is closing, and your convenient app has left you in the lurch. This isn't a one-off story. It's a recurring theme in user reviews and online forums. The technology works until it doesn't, and when it fails, it often fails at the most inconvenient times. Simple changes like updating a payment method can sometimes get locked in a loop. Trying to understand the details of your coverage often leads you to a PDF of your policy declaration, which is helpful, but it's not the user-friendly breakdown you were hoping for from a sophisticated app. The website experience is largely a mirror of the app, just on a bigger screen. For some, this is a plus. It offers a more stable platform for navigating those dense policy documents, but it also suffers from similar limitations. If a process is confusing on the app, it's likely just as confusing on the website. It feels less like a fully featured management portal, and more like a simple interface for payments and ID cards, with everything else requiring you to eventually pick up the phone. And that brings us to the ultimate test of day-to-day customer service: calling them. When the tech fails, you have to turn to a human. The first obstacle, as with nearly any large corporation, is the automated phone system, the interactive voice response, or IVR. You call and a pleasant robotic voice greets you. For claims, press 1. For billing and payments, press 2. For policy changes, press 3. You listen carefully, you press 3. The robot asks for your policy number, which you dutifully punch in. Then your date of birth. Then your zip code. After this security gauntlet, you're presented with another menu of options. You listen again, make your selection, and you're met with another menu. This is the IVR labyrinth. Many customers report feeling trapped, repeatedly being sent to the wrong department or having the system fail to understand their request, ultimately forcing them to just keep pressing 0, shouting agent, hoping to connect with a living, breathing person. When you finally get through the maze and into the queue, the next variable is wait time. And this is a complete roll of the dice. Some people report getting through to an agent in under 5 minutes. Others tell stories of sitting on hold for 45 minutes, an hour, or even longer, all while listening to the same repetitive hold music. The time of day and the reason you're calling seem to have a huge impact. Calling midday on a Tuesday with a simple billing question? You might get lucky. Calling on a Monday morning to discuss a complex policy change? You might want to make a sandwich. But let's say you've made it. You've navigated the robot, you've endured the hold music, and a real human is on the line. This is the moment of truth. Is the agent knowledgeable, empowered, and empathetic? Or are they just a script reader at a call center halfway around the world? The answer is, it depends. Wildly. Liberty Mutual is a massive company, and the quality of its customer service representatives is notoriously inconsistent. You might get an agent like Sarah, a veteran who has been with the company for a decade. You explain that you need to lower your mileage estimate because you're working from home now, and you're wondering how that will affect your premium. Sarah doesn't just make the change. She proactively looks at your policy and says, you know, since your driving habits have changed, you might also qualify for our telematics program, RightTrack. It could save you up to 30%. Would you like me to explain how it works? In 5 minutes, she has solved your problem, educated you, and potentially saved you hundreds of dollars. You hang up feeling valued and impressed. That is great customer service. Then there's the other side of the coin. You call with the exact same question. This time you get an agent who seems unsure of themselves. You explain your situation, and they put you on a long hold to check with a supervisor. They come back, make the mileage change, but when you ask how it will affect your premium, they give you a vague answer. You should see the change reflected on your next billing statement. You ask about discounts, and they list off the generic ones from their computer screen, showing no real understanding of your specific situation. You hang up feeling like you just interacted with a human version of the automated phone tree. The task is technically complete, but the experience was hollow, unhelpful, and left you with zero confidence. This inconsistency is perhaps the most frustrating part of Liberty Mutual's non-claim service. You never know which version of the company you're going to get. Will you get the sleek, efficient app? Or the one that glitches out at a critical moment? Will you get the expert, helpful agent, or the one who can barely navigate their own system? This variability makes it difficult to give a simple good or bad rating. The system is designed for the 90% of interactions that are simple and straightforward. If your needs fall within that 90%, paying a bill, showing an ID card, you'll likely find the experience to be perfectly adequate, even good. But if you fall into that 10% with a more complex issue, a unique situation, or simply a need for clear human guidance, you risk falling into a frustrating loop of technological roadblocks and inconsistent human support. So, the technology is a mixed bag and the customer service is a gamble. It works, but it's not a system that inspires deep loyalty or confidence. It's functional, but when you're paying thousands of dollars a year, is functional really good enough? This raises an even bigger question. We've looked at the discounts, the claims, and the service. But what about the company itself? What about its financial health, its long-term reputation, and the fine print buried deep within those policy documents that almost nobody ever reads? Because that fine print, that's where the true promises and the real limitations of your coverage are hiding. And that's exactly what we need to uncover next. So let's pull back the curtain on that dense, intimidating document. Think of your insurance policy not as a brochure, but as a legally binding contract. Every single word is there for a reason, and it's usually to define the exact boundaries of the insurer's responsibility. The first and most important section to understand is the exclusions. This is the part of the contract where Liberty Mutual or any insurer explicitly tells you what they will not pay for no matter what. The most obvious exclusion is for intentional acts. If you purposefully drive your car into a lake, don't expect a check. That's insurance fraud. But the exclusions get much more subtle, and this is where good people with honest intentions get burned. A huge one is wear and tear. Your policy is designed to cover sudden and accidental damage. It is not a maintenance plan. If your transmission fails because it's 15 years old and has 200,000 miles on it, that's on you. If your tires are bald and you blow one on the highway, the cost of the tire isn't covered. Insurance is for the if, not the when. But the single biggest gotcha in modern auto insurance, and one you absolutely need to check on your Liberty Mutual quote, is the business use exclusion. The standard personal auto policy is written with the assumption that you are using your car for personal reasons, commuting to work, getting groceries, going on a road trip. The moment you start using your car to earn money, you can instantly void your coverage. Think about the gig economy. Are you delivering for DoorDash, Instacart, or Amazon Flex? Are you driving for Uber or Lyft? During the time you are logged into that app and available for hire, your personal policy, including a standard Liberty Mutual policy, may provide absolutely zero coverage. Imagine this. You're on your way to pick up an Uber passenger. You get T-boned at an intersection. Your car is totaled, and you have significant medical bills. You file a claim with Liberty Mutual. They investigate, see you were active on the Uber app, and send you a denial letter, citing the business use exclusion. Suddenly, you are personally on the hook for a $30,000 car loan and $50,000 in medical debt. This happens every single day. To get around this, you need a specific rideshare endorsement added to your policy. Liberty Mutual offers one, but it's not automatic. You have to ask for it, qualify for it, and pay for it. If you're involved in the gig economy in any way, failing to have this conversation with your agent is financial malpractice. Another area where the fine print matters immensely is with custom equipment. Did you upgrade your sound system? Put on expensive custom wheels and tires? Add a lift kit or a custom paint job? Your standard comprehensive and collision coverage has a very low limit for this stuff, usually around $1,000 to $2,000. So if you've poured $10,000 into customizing your ride and it gets stolen or totaled, you're only getting a fraction of that back. You need to purchase custom parts and equipment coverage. Again, it's an add-on. You need to be proactive, tell them what you have, and make sure the coverage limit is high enough to actually protect your investment. Then there are the definitions. In an insurance policy, words don't always mean what you think they mean. They mean what the policy says they mean. Take the term family member. You might think that means your spouse and kids, but in the policy, it's usually defined as a person related to you by blood, marriage, or adoption who is a resident of your household. That last part, resident of your household, is critical. What about your son who is away at college, living in a dorm 9 months out of the year? Is he still a resident? Maybe, maybe not. Can become a legal battle. What about your daughter who just graduated and moved into her first apartment? She's still your daughter, but she is no longer a resident of your household, and if she borrows your car, she may be covered differently than when she lived at home. These definitions create razor-thin lines between being covered and being denied. Or consider a term like temporary substitute auto. You might think if your car is in the shop, any car you borrow is covered. But the definition is incredibly specific. Your policy will only extend to that borrowed car if your insured vehicle is out of normal use because of its breakdown, repair, servicing, loss, or destruction. So if you just borrow your friend's pickup truck for the weekend to help move a couch, but your own car is sitting perfectly fine in your driveway, that truck may not be considered a temporary substitute, and your coverage may not apply. It's these nuances that trip people up during a claim. Finally, the fine print outlines your duties after an accident or loss. This isn't a suggestion. It's a list of contractual obligations. The first is to provide prompt notice. What does prompt mean? The law is vague, but the best practice is immediate. Waiting weeks or months to report a claim gives the insurance company a reason to question everything. It allows them to argue that your delay prejudiced their ability to investigate the accident properly, which can be grounds for denial. You also have a duty to cooperate with their investigation. This means you have to answer their questions, provide them with requested documents like medical records or wage statements, and allow them to inspect your vehicle. In some cases, you may be required to submit to an examination under oath, or UO. This is a formal, recorded statement given with a court reporter present, just like a deposition. It's a serious step, and it means the insurer has questions about the validity of your claim. Refusing to cooperate, refusing to give a recorded statement or an EUO, is a breach of the policy contract and an automatic denial of your claim. You also have a duty to protect the property from further loss. After a crash, you can't just leave your car on the side of the road for a week. You need to have it towed to a secure location to prevent vandalism or theft of parts. If a tree falls on your roof and breaks a window, you have to put a tarp over the opening to prevent rain from getting in and ruining the interior. The cost of these reasonable steps is usually covered, but failing to take them can lead to the denial of any subsequent damage. So when we look at Liberty Mutual, we're not just looking at a brand or a jingle. We're looking at a complex legal document. Their policy, like Geico's or Progressive's, is filled with these exclusions, definitions, and duties. The key difference often lies in how these terms are applied by their adjusters and the specific endorsements they offer to patch these potential holes in your coverage. like their rideshare option or their coverage for custom parts. Understanding this fine print isn't about becoming a lawyer. It's about understanding the true nature of the product you are buying. You're not buying a feeling of security. You're buying a specific conditional promise. We've now gone from the public face of Liberty Mutual to the private reality of its contracts. We've seen how they handle claims and what their customers really think. We've dug deep into the fine print that governs every single claim. Now, with all of this information on the table, it's time to answer the ultimate question. The one we started with. We need to weigh the competitive pricing and digital tools against the customer service complaints and the contractual complexities. Is Liberty Mutual a good choice for your next car insurance? We'll put it all together and give you the final verdict next. All right, let's land this plane. We've journeyed through the massive marketing machine of Liberty Mutual. We've dissected its coverage options. We've celebrated its digital prowess. And we've confronted the troubling pattern of customer service complaints. It all comes down to this single crucial question. Should you trust Liberty Mutual with what is likely one of your most valuable assets and your financial well-being on the road? The answer, frustratingly, isn't a simple yes or no. The truth is, Liberty Mutual exists as a paradox. It is simultaneously one of the most accessible, feature-rich, and potentially affordable insurance options on the market, and one of the most frequently criticized when it comes to the single most important moment, the aftermath of an accident. To give you a final verdict, we can't just look at the company. We have to look at you. Your personality, your priorities, and your tolerance for risk will determine if Liberty Mutual is a brilliant choice or a potential nightmare. Let's break this down into 3 types of insurance buyers. See which one you identify with. First, there's the tech-savvy deal hunter. This person lives on their smartphone. They are comfortable managing accounts through an app. They prefer digital communication over phone calls. And their primary motivation is finding the absolute lowest premium possible. They understand that a lower price might come with some trade-offs. They're young, maybe a student, or just starting their career. They have a relatively clean driving record and are willing to use a telematics program like RightTrack to prove it and earn that discount. For this person, Liberty Mutual can be an outstanding choice. Their digital tools are genuinely top tier. Getting a quote is fast, managing the policy is easy, and the potential for stacking discounts, from online purchase to good student to RightTrack, can result in a premium that blows many competitors out of the water. This person is willing to roll the dice on customer service, betting that they won't need to file a major claim, and if they do, they're savvy enough to navigate a potentially frustrating process to save hundreds of dollars a year. If you are this person, Liberty Mutual should be at the very top of your list to get a quote from. Next, we have the peace of mind seeker. This person values service above all else. The idea of having to fight with an adjuster after a stressful, traumatic accident is their worst-case scenario. They are willing to pay a higher premium, sometimes a significantly higher premium, for the assurance that if they call, a helpful, empathetic human will be on the other end, ready to guide them through the process smoothly. They might be a busy professional, a parent with a family to protect, or simply someone who believes you get what you pay for. They want a relationship with their insurer, not just a transaction. For this person, Liberty Mutual represents a significant risk. The consistent, year-after-year, below-average ratings from J.D. Power for claim satisfaction are not just numbers on a chart. They are thousands of stories of frustration, delays, and lowball settlement offers. The potential savings simply aren't worth the potential emotional and financial cost of a poorly handled claim. If you are this person, you should be extremely cautious. You would likely be far happier and feel more secure with a company known for its stellar service record, like Amica Mutual, USAA if you're eligible, or even a local agent from State Farm or Erie Insurance who can provide that personal touch. Finally, there's the complex needs bundler. This individual's life isn't simple. They have multiple vehicles, maybe a classic car or an RV. They own a home, maybe a rental property. They have a teenage driver who needs to be added to the policy. For them, insurance is a complex puzzle, and the convenience and savings of bundling everything with one company are huge priorities. This person is drawn to Liberty Mutual's vast menu of options. The new car replacement, the lifetime repair guarantee, the specific endorsements for teachers. These are not just marketing gimmicks. They are valuable solutions to real-life needs. The potential for a massive multi-policy discount is incredibly appealing. For this person, the decision is the most difficult. Liberty Mutual offers the exact customization and bundling benefits they're looking for, but the service gamble remains. The risk isn't just a single car claim. It's a complex home and auto claim where the stakes are even higher. If you are this person, the path forward requires diligence. You should absolutely get a detailed quote from Liberty Mutual, carefully laying out all your needs. But then you must take that quote and shop it directly against other large-scale insurers like Progressive, Allstate, or State Farm, who also offer extensive bundling options. Your decision will come down to a careful calculation. Do the unique features and potential savings of Liberty Mutual outweigh the documented service risks, especially when your entire financial portfolio is on the line? So what is the final actionable advice? What should you do the moment this video ends? 1. Get the quote. Liberty Mutual has made it incredibly easy for a reason. Go to their website, use their app, and in 10 minutes you will have a number. That number is your starting point. It is a crucial piece of data. 2. Interrogate that quote. Do not just look at the price. Open the policy details. What are the liability limits? What are the deductibles? Does it include rental reimbursement and roadside assistance? Or are those extra? Are you being quoted for their standard policy or a more customized one? The price is meaningless if the coverage doesn't actually protect you. 3. Become a local detective. Insurance is not a national product, it's a local one. Go to the J.D. Power website and look up the auto insurance satisfaction ratings for your specific region of the country. A company's performance can vary dramatically from state to state. Check with your state's Department of Insurance website. They often publish official complaint data, showing which companies receive a disproportionate number of consumer complaints. This local data is far more valuable than any national ad campaign. And 4. The golden rule. Never accept the first offer. Ever. No matter how good the Liberty Mutual quote seems, you owe it to yourself to get at least 2 more quotes from different types of insurers. Get one from another direct-to-consumer giant like Progressive or Geico. Get another from a company that uses local agents, like State Farm or Farmers. This is the only way to know if you're truly getting a good deal. You might find that another company offers a similar price but has a stellar service record. You might find that the Liberty Mutual deal really is the best for your specific situation. But you will never know unless you compare. In the end, choosing a car insurance company isn't like choosing a brand of soda. It's a decision to hire a financial bodyguard. You are paying a company to stand in for you in what could be one of the worst moments of your life. Liberty Mutual, with its catchy jingles and customized approach, wants that job. They offer a compelling resume filled with digital innovation and attractive pricing. But their references from a significant number of their past clients are mixed at best. The final verdict is this: Liberty Mutual is a good choice for the informed, price-conscious consumer who is comfortable with the digital-first experience and is willing to accept a higher risk when it comes to customer service. It is a questionable choice for anyone whose top priority is stress-free, reliable support in a crisis. Your car insurance policy is a promise. It's a promise that if the worst happens, you won't be alone. Your job is to scrutinize that promise, to read the fine print, and to choose the company you believe is most likely to keep it. Whether that company is Liberty Mutual, well, that is now up to you. Drive safe.